StockPulse on location, Sprott Resource Symposium, Vancouver, British Columbia. With me, Brien Lundin, Gold Newsletter. Brien, appreciate you stopping by and give me an update on the gold market because that's what I want.
Yeah.
Thank
you.
Let's dig right into that. Gold's at a great place. We're in the summer. Lay this out. Are we ahead of schedule?
I think we're ahead of schedule. I think we're at a really interesting point, a really exciting point for investors. Gold has a new gold bull market has been confirmed from a technical basis. Gold broke through all of the key resistance levels, 1,400 being the important one. It's already tested that a few times, been pushed down below 1,400, has rebounded strongly every time. The mining stocks have leveraged gold's moves from the beginning, which is very encouraging. That's one of the key indicators that the move is real and has legs to it. But silver has been the laggard for a while. Then literally a couple of weeks ago, silver started to move as well. And right now it's been outpacing gold. It's been rising. Even on days when gold has dropped, silver has been powerfully moving ahead. So that's, from a technical standpoint, really the third leg of the stool, the final thing we needed to confirm that we really are in a new gold bull market. But on the other hand, the junior mining stocks, the companies like we're seeing around here, have yet to really respond to it. Now, there have been some exceptions here and there, but largely they have just begun to respond to this move in gold. So I think it's a kind of a perfect setup for investors in that you've got the gold move confirmed, but there's still bargains galore in the junior sector. And I think that they really need to get aggressive. You don't really look to get aggressive in this sector in the middle of summer, but I think this is an exception. I think this is the time to do it.
What'll be a catalyst that'll drive people into these opportunities that you're talking about?
Federal Reserve. That's pretty much it. The Federal Reserve moving from really 6-7 months ago being in a tightening mode to switching to actually cutting rates is remarkable. It's a remarkable shift in direction for the Federal Reserve and monetary policy from the world's most powerful central bank. So I think that will be the driver. Now, it's already kind of built into the price of gold and the mining stocks right now. So we'll see literally tomorrow what the Fed does, but it's widely expected they're going to cut a quarter point. We'll have to see what they do in the months ahead and how the economy shakes out, what indications they are going to give that they are going to cut again or they are not. I think if they seem to give an indication that they won't cut, then the stock market, the U.S. stock market, will quickly deliver the message to the Federal Reserve that no, we want another cut. And then the cycle will start again. And I think that'll be bullish over the long term for gold.
So I racked my brain trying to figure out where gold might fail here, and I'm having a tough time putting reasons together. You got any?
It absolutely could, because it has become kind of a consensus pick. Everybody is bullish on gold. You look at the charts, it's a great looking chart, but everybody agrees on that. So it's kind of due for, if not a correction, then a pause. It had reached very overbought levels over the past few weeks or so. Now, it can cure those overbought levels one or two ways: through price action, dropping in price, or just through time, just maintaining where it is, these levels, for some period of time. And that has been what it's been doing. So if it keeps that up, if it doesn't fall, then it's going to start rising again. That's the key thing to look at, is how solid is gold at these levels. From my standpoint, having watched the price of gold on a daily basis for almost 3.5 decades now, you get a sense of when the gold market wants to rise, when sentiment is positive, and we're in that kind of a position right now.
Make of the U.S. dollar running with gold. Isn't that a little peculiar?
That is peculiar, and I don't think it's going to end anytime soon. I wasn't a big fan of this dollar bull story over the past 7 or 8 months or so, because I didn't really think it was strong. But now it has from a technical standpoint look like it is strong, and it probably does have a little more room to run. But again, the Trump administration doesn't want a stronger dollar. If it comes to it, they'll intervene. So the upside, I think, to the dollar is limited. The key again is going to be where the market feels the Federal Reserve is going to go. Now, the dollar may still be, or the interest rates in the U.S. may still be largely above, way above where they are in the rest of the world. But if the dollar is valued on that basis, if it looks like the Fed is going to aggressively start cutting rates, then the dollar is going to lose relative value much more quickly. It's not so much where you are, but the direction you're going in investment markets. If the dollar is headed lower as the world's reserve currency, it's going to lose ground pretty quickly.
So how do you kind of see the rest of the year, maybe the fall shaping up here? Strong dollar. Dollar's going to continue to probably run. Gold will go. Silver catch up? Silver the way to play this, or?
Silver is the way to play it. Silver has made a big run over the last week or so in relation to gold. I like some of the silver miners or the silver plays. They have been moving themselves recently, but I think there's still a lot of room there. At $17, $18 silver, a lot of mines that have been just barely making it are all of a sudden going to get into the money, and the exploration plays are going to attract a whole lot of attention.
Okay. That's Brien Lundin, goldnewsletter.com. Is that the best way to follow you, Brien?
That's it, goldnewsletter.com, neworleansconference.com, and our conference in New Orleans coming up November 1st through 4th.
Okay.
This year.
Appreciate the time. Brien Lundin.
Thank you, Rob.